You know what's crazy? Most people will touch money every day for the rest of their lives, but they'll never understand how it actually works. When school taught that money is a medium of exchange, they didn't want you to know something deeper. I'm talking about the monetary system's real architecture. The rules that decide whether you will have true financial freedom or whether you will keep blaming yourself for not having enough money all the time. I'm Steve, and today I'm going to show you how money works in real life and why those who understand it are playing a completely different game than everyone else. Once you understand the rules, you'll stop making mistakes that feel normal only because everyone around you is making them too. And I want you to stay with me all the way through, because the biggest twist in this video is how the system created a problem in your finances and then convinced you it's all your fault. Let's start with a question that sounds basic. Turns out it's not. What is money? Most people will tell you money is a medium of exchange or something you earn, and that's not far from reality. But the real truth is, money is just trust. That's it. Money has no inherent value because it's literally paper. It also has no value because it's not backed by gold anymore. That ended in 1971 when President Richard Nixon ended the direct exchange of the dollar for gold. Money just has value because everyone agrees it does, and because governments of the day, along with billions of people, believe in the paper's value, it becomes real. But here's where it gets unsettling. Let me explain why a paycheck does not equal real wealth. A paycheck is just a promise that the bank will honor the numbers showing on your account, and as long as everyone believes in that promise, the system will run smoothly. But why does your money's real value drop over time when you keep it in the bank? Sounds like a betrayal of the same expectation that the bank would honor the numbers showing on your account, right? That's what's called inflation. Inflation is basically part of the system's design to keep everyone pressed down. Let me explain. If you made $2,500 a month in 2010, you could survive in many places. But if you make the same $2,500 a month today, that might not even cover rent, plus the bills and taxes, depending upon your location. This means the system is somehow able to figure out how much your time is worth year after year, even if your productivity remains the same. But your time's worth somehow declined over the years, and what's worse, everything became more expensive. Now, here's where things get even more nerve-wracking, honestly. Did you know that money is created through lending? I mean it literally, and this is the part they will never reveal. Because if you truly understood it, you would find the missing piece of the puzzle. Let me explain. When you put money in a bank, the bank does not lock it in a vault with your name on it. It lends it out. And in modern banking systems, banks don't even need to hold the full amount of money they lend. They only need to keep a fraction of it. And that's why you can deposit $5,000 right now, and the bank can lend far more than that later, based on its total deposit pool. But here's the real kicker. When a bank gives someone a loan, it doesn't give them existing money from a pile. In most cases, it creates new money out of thin air by typing numbers into existence. The loan now becomes a new deposit somewhere in the system. So, in a very real sense, the modern economy operates almost entirely on debt. If that person defaults, the money literally disappears from the system. Now, if you're still with me, what I'll show you next will change how you see everything. This means a huge portion of money. Someone owes it back. Someone is paying interest on it. And this is why the system is obsessed with keeping people borrowing. Because if borrowing slows down too much, the system will start running slow. Jobs will disappear. The market will crash. And this is what activates panic mode. But it gets even darker. The system doesn't just need debt. It needs debt to keep growing. Let me give you some perspective. Let's say a bank prints $1 million in a loan at 10% interest. So now we have $1 million injected into the economy, but there's also a requirement for $1,100,000 to be paid back. Where does the $100,000 in interest come from? If you now get the cycle we're talking about, it has to come from more borrowing, so more debt. By the way, if any of these relate to you, hit the like and subscribe button so we can continue to make more videos like this. Your support means the world to us. Now, let's play out a scenario. This is Daniel. Daniel is 28. He works a decent job. He earns $3,800 a month. Not rich yet, but he's not broke either. A few months down the line, he wants something that makes life easier. So he takes a loan for a car. It's not even a luxury car. It's just a Honda. The monthly payment is $550. Insurance is $180. Fuel is another $220. Maintenance averages $60 a month. This means he's paying about $1,010 a month just to keep the car running. That's 25% of his income. And because he's also paying $350 per month to service his student loan, Daniel can't quit his job to get a new one with better pay. The system has successfully suppressed his risk appetite, so he won't start a business soon. He's become obsessed with maintaining a high credit score, and now multiply Daniel by millions. This is why the idea of banks giving you easy loans is actually a psychological game. The people at the top of the system know that when you have such obligations, you are predictable. And that brings us to one of the most brilliant tricks the modern money system ever created: status. Today, money isn't just for survival anymore. It's for identity. It's how people signal success. It's how they protect their ego. And the system knows this. That's why you're constantly being trained to want things you never thought you'd want 5 years ago, through aggressive ads on social media and people who are close to you. A phone that costs the same as rent. A watch that costs the same as a car. A lifestyle that looks rich, but it's all for the show. And here's the genius part. The system also gives you an easy way to buy what you want now, even if you don't have enough money. Credit and more credit. That's the catch. Now you might be thinking, okay, Steve, so you're telling me the system runs on debt and everything is designed to keep people borrowing. But I can just opt out, right? I can just avoid debt. In theory, yes. In real life, it's not that simple. Even if you avoid loans, you still live inside a world where everything is high-priced because the people at the top of the system know you will borrow. Do you understand that this is the culture? They know you have access to credit. Now let me show you how the top 10% live. If you understand this next part, you can't be played as easily anymore because you understand how money works. There are 2 ways to use money as a tool, and each will lead to a completely different outcome. When most people borrow money, they borrow to buy things that depreciate. A car, a phone, some furniture, a vacation. So the debt goes up, but their net worth remains stagnant. But when wealthy people borrow money, they borrow to buy assets, real property, a business, a storage warehouse, a piece of land, some stocks, something that generates income. So yes, their debt goes up, but their real net worth goes up faster. And this is where the system reveals its true loyalty. When you borrow for consumerism, the system punishes you with high interest. Credit cards can hit 25 to 35% APR. Personal loans can hit 18 to 30%. But when you borrow as an investor, the system rewards you. Business loans get lower rates. Mortgages for rental properties are structured differently, and in many places, the tax system won't be too harsh toward interest paid on investments. Meaning, the system literally rewards people who already have assets. Now, if that sounds unfair, well, you're right. But you can't change the system on your own. So instead of being emotional about it, the smartest move is to learn the game and start playing it right. Let me give you a simple example. Mike and Sarah, same age, same income. Both earn $4,500 a month. Mike takes a loan for a $30,000 car. Sarah takes that same $30K loan and uses it as capital for a small service business, maybe a small equipment rental or a phone repair shop. After 24 months, Mike's car is worth maybe $18,000 and still owes $22,000 because of interest. Sarah has a business that's making between $1,200 and $2,500 per month, and she could sell it later at a profit. Same debt, different use, different outcomes. Now let's talk about what actually sets people apart financially for good, which is compound interest. Most people think compound interest is just extra money you earn for keeping some bonds. But in real life, compound interest is what locks people into different classes. Let's say Sarah invests $1,000 per month in the stock market for 20 years. Not a huge amount, just $1,000. That's $12,000 a year. If she gets an average return of around 8% annually, she'll end up with over $550,000 after 20 years because of compounding. Now, the first 10 years won't look impressive, and that's why people quit. But if you want to truly benefit from compound interest, you need to avoid borrowing so that you don't sell your investments midway to offset your rising debt. Now, understanding how money works won't give you automatic freedom. It does something far more important. It lets you know you've been playing a game where the default settings were designed for you to lose. And now that you understand the game, you can start to choose differently. You can decide you won't keep trying to finance a lifestyle that you have to borrow money to keep it going. You can decide you don't want to look rich when you're not truly rich yet. You can decide to start using money as a tool to make more money so that you become harder to control. What you decide to do with this new information is entirely up to you. If you enjoyed watching this video, be sure to hit subscribe and leave a comment. Remember this: change begins where there are consistent actions, and we'll see you in the next one.